Good morning, viewers. It's Thursday morning, March 27, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Wall Street stocks ended sharply lower on Wednesday as investors awaited information about long promised US tariffs on automotive imports. US President Donald Trump was set to announce plans for car industry tariffs at a press conference on Wednesday, widening the global trade war he kicked off this year. Auto industry experts expect the move to drive up prices and stymie production. For weeks, Trump had promised to announce a swath of reciprocal tariffs on April 2. And in breaking news, after hours, President Trump said he would impose 25% tariffs on global automotive imports to the US, making good on the pledge to impose duties on cars and trucks from other nations. 3 days of relative peace were broken on Wall Street, with big tech driving major stock benchmarks lower as concern about a trade war's impact on the economy and inflation resurfaced to squelch risk appetites. The tech sell off returned on Wednesday as tariff talk drove investors to duck and cover. Concerns about potential levies on everything from cars to microchips weighed down bellwether tech stocks. The expected announcement of new automotive industry tariffs fueled further selling, and the Nasdaq Composite closed down 2.04% to 17,899 points. The S&P 500 gave up 1.12% to end the session at 5,712, and the Dow Jones Industrial Average fell 0.31%, or 133 points to 42,455 points. Russell 2000 dropped 1%. Of the 11 S&P sector indexes, 6 declined, led lower by information technology, down 2.46%, followed by a 2.04% loss in communication services. Technology shares had bounced back recently, with so-called Magnificent Seven rising 6.2% in the previous 3 sessions, the strongest performance since November. But an exchange-traded fund tracking the Max 7 pulled back about 3% on Wednesday. Amazon, Alphabet, and Meta platforms all slipped more than 2%. NVIDIA, Tesla, and server manufacturer Microcomputer falling 5% or more. Shares of Tesla dropped 5.6%, and the heavyweight chip makers NVIDIA slid almost 6%, and Broadcom fell almost 5%, pushing the Philadelphia chip index down 3.3%. Last Friday, tariffs were seen not as broad, and then it widens to maybe add copper and autos. This is being right back into defensive mode. Markets hate the tariff uncertainty, especially when it pertains to autos. Autos are ground zero for negative economic impact of tariffs. Hence, General Motors lost 3.1%, with investors uncertain about the scale of tariffs, retaliatory measures from trading partners, and potential ripple effects on the global economy and businesses. Signs that the Trump administration had been narrowing its plan for tariffs boosted markets. However, investors remain on edge ahead of April 2, when the White House is expected to announce new levies. Investors and consumers continue to be whiplashed by the near daily twists in trade policy. Ford finished almost unchanged. Stock investors dumped growth stocks and sought shelter in industries that perform better during economic recessions, like consumer staples and utilities. Hormel Foods and Tyson Foods gained nearly 3% on Wednesday. GameStop shares jumped 12% after the video game retailer and one-time meme stock reported results and said it would start investing in Bitcoin, following its board's unanimous approval to incorporate Bitcoin as a treasury reserve asset. Dollar Tree rose 3.1% after the retail chain said it was nearing a sale of its Family Dollar business to a consortium of private equity investors for about $1 billion. A survey revealed a decline in optimism among top business executives in the first quarter. Businesses worry of tariff-related price hikes scrambled to build up inventories. Data showed an unexpected increase last month in orders for durable U.S. manufactured goods. Consumer and business sentiments have also been dented by White House rapidly evolving tariff threats, survey data has shown, though other indicators suggest the U.S. economy remains on strong footing. Durable goods orders rose 0.9% in February, new data showed on Wednesday, blowing past expectations for a 1% decline. Barclays revised its S&P 500 target downwards to 5,900 points from 6,600. S&P 500 has lost 3% so far in 2025, while the Nasdaq is down over 7%. The main focus later this week will be the personal consumption expenditures price index, the Federal Reserve's favored inflation gauge, due on Friday. In other trading, the yield on the benchmark 10-year Treasury note closed at 4.34%, up from 4.31% on Tuesday. New York traded copper futures hit a new high of $5.216 per pound on Wednesday, a 0.64% rise on the day and a 3% gain over the past two sessions. The White House has threatened tariffs on copper imports. The dollar spot index rose 0.3%. Bitcoin fell 1.5% to $86,552. In commodities, West Texas Intermediate crude rose 1.1% to $69.73 a barrel, and spot gold was little changed. That's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.